Investors.
The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN, 9:06 a.m. Friday morning. We got about 24 minutes to go until the start of trading, and we got markets accelerating higher, continuing the trend. We got the S&Ps up 9 points this morning. That's more than 0.2% in the positive, trading at 42.38. We got the NASDAQ 100 positive by about 20 points, 13,968, bumping up against all-time highs in the NASDAQ 100. We got the Dow about 550 points from that level, 34,470 in the Dow. You see the acceleration in the Dow yesterday. Last night as low as 34,313, and the Russell is positive by more than 0.5%, up 13 points at 2318. Bitcoin's up $700 this morning, 37,405. Quite a resurgence from the lows of Tuesday. We got crude continuing to hold a pretty steady high above $70. We reached $70.80 this morning. That price point at about 7 a.m. We're currently trading at 70.38. You jump to the gold contract, giving up some of the gains. Gold yesterday spiking higher on the CPI data. We accelerate to 1905 overnight. We give back a lot of those gains back to 1886. And notes and bonds right now, you see the move we had yesterday, initially going lower, and then just like that, we reverse. We rise to a high of 133.06, and right now we're sitting 132.30. You got a yield on the 10-year about 1.45%. And as we talked about, to kick things off, the VIX. Really interesting action on the VIX, the way that the volatility is getting sucked out of this market. Now, sometimes you see prints on the VIX that are not necessarily representative of where the trading is going in that market. As in, you see these long tails. Those are just one type of a print. But right now, we have this VIX in a real way accelerating to 1537. You put this thing on a 3-year weekly, you can see, folks, we're talking about lower lows across the board. 1538, that was the low when you back it up to the week of April 12th. Made it as high as 2893, and just like that, we're sitting at 1538 right now. Actually made it as low as 1515 I have on my chart. We're coming into summer trading. We have CPI data out. We have the jobs number data out. Market probably seems pretty calm for the next couple months, I think, is what this market's pricing in to say, hey, no real surprises, if anything. Really transitory numbers with the used car vehicles, putting 1/3 of the CPI, the rise in there. You have jobs not quite getting back there to where we want. That means that the Fed is probably going to be able to at least argue, whether they're right or not, they're going to be able to make the case that they see transitory nature in inflation. That's going to allow them to keep stimulus in there. They're not going to have to talk about tapering, maybe as soon as they thought, at least not for the next month or two, as they're not worried about the inflation. They're going to get to make that argument that it's transitory, and they still have to be in there because we haven't made up the jobs that the Chairman Powell has talked about wanting to make up in a big way. So we'll see how that goes out. All right, let's jump around to what else we got going on. So, of course, you have the G7 going on. One of the things they're talking about is the 15% minimum corporate tax rate, how that plays into things. A very long-term conversation in a big way. But jumping around to just some of the stocks that are moving this morning to kick things off. So Snowflake, they've been in the press a lot recently. They had their investor day. So shares lower as they financial targets. It's remarkable. They're going to set a target of reaching $10 billion in revenue by 2029. I don't know. Yes, that's a target, right? They would be held for it. Trying to do a pro forma spreadsheet 8 years into the future is just fantasy, really. Talk about how hard it is just to go quarter to quarter, let alone year to year. They're going 8 years out for a company that right now has $500 million in fiscal revenue. They're talking about maybe $10 billion. Maybe the market thinks they should grow by more than 20 times over the next 8 years when you factor things in. But Snowflake will pull them up this morning. Quite a little acceleration, getting ahead of itself to 429. You were back to 184, but on that investor day news, there's an acceleration for you. Down to 235. We're at 239.78 right now, lower overnight for them. Chewy earned 9 cents a share. So they were out with their numbers. The market was looking for 3 cents a share loss. Pet products retailer revenue also beat estimates, upbeat revenue outlook, warned of labor shortages and supply chain issues that are impacting product availability. Not too surprising there, considering that's going on across the board. A little bit of volatility last night, but this thing's going to come in kind of flat. About $1 within where you were from 79.30. We're trading at 78.30 right now. Let's just jump around to some of the FANG stocks. Quite the acceleration you had yesterday, and you're going to continue that a little bit tonight. This morning. 33.58. We've backed off a bit. Amazon, though, I mean, look at this run. Amazon's put up $180 this week to the upside. $180. Amazon has added to the price of those shares. You put this thing on a weekly, you see the consolidation. We've been chopping in between about 3,000 and maybe 3,500. It's quite a weekly bar for Amazon to the upside. You saw it yesterday. Microsoft, I mean, look at these weekly bars. Microsoft pushing right up near all-time highs. Trading at 257. Excuse me, my allergies getting me this morning. 257, the high of 263. We'll jump to Google. And look at that chart in Google. Google, quite a rocket ship in a big way. Google shares accelerating to 25.23, and we're going to open higher this morning. You put it on a 15-minute for Google shares. It just continues to crawl higher. Facebook shares, the high of 338.30 on Tuesday. Interesting that you get Apple coming out with their, I believe they had their Worldwide Developer Conference on Tuesday, or maybe that was Monday. Nonetheless, almost all-time highs across the board for Facebook during that time. You put this thing on a daily, and you're just sitting right up there near all-time highs for Facebook. We'll jump around to some of the stocks I like to take a look at to kick things off. Disney, been pulling back, but at some point, pulling the numbers. You're talking about a retracement here. Pretty close to that 382, also correlating to an area that we had some support maybe back in the beginning of January. We've bounced a bit. You get Disney trading at 176.57. Jump to Uber as well, which I like to take a look at. Uber, we have two different going for Uber. You have almost a 618 of a pullback that you get from the move from November. Okay, so that 618 correlating where it bounced from about $44. Now you put Uber on a 3-year weekly. Let's erase this one completely. You back it up to the full low we had, and you're talking about Uber aligns. That $44, also the 382. That's called confluence. You have two different trends from two different Fibonacci retracement zones. The 382 retracement correlating to the entire run from the COVID lows, and then you have the 618 retracement correlating to the lows from November. And again, you put that on there. And as you see, that 618, the 382 coming in right at about $45. That is also right around where it bounced. Maybe that's an area of support for Uber at $49.55. And as we wait, we got about 16 minutes to go until the opening bell. I'm going to blow my nose when we go to a commercial break for these little allergies I got kicking around. But we got the S&Ps up about 8 points right now. Let's jump to that 15-minute. As we look to challenge the highs that we had about 7 a.m., we have the NASDAQ 100 up 17. We have the Dow up 110 points right now. Dow a little bit of ways from 35,000 with the high, but you're talking about an S&P right up near all-time highs near the open. NASDAQ 100, we didn't quite get there yesterday, putting it on a daily. But NASDAQ 100, as we all know, 100 points in that index within a stone's throw of all-time highs. Those highs made April 29th. And then you look at the Russell, not that far off the way the Russell trade is. Well, talking about basically only 50 points away from the Russell, about 2% from the all-time highs that we had. We made it a couple days ago this week to about 23.50. Russell trading this morning up 10 points. Stay tuned, folks. We'll be right back in 3 minutes.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps up about 8 points right now. We get the NASDAQ 100 up about 15 points. Thank my beautiful fiance out there. Yes, I did. I took some Flonase. I blew my nose. Hopefully I get a little bit. The allergies, they're out and about this morning. But nonetheless, we persist. Let's jump around back to some of those stocks that are making moves this morning. So Dave & Buster's, talk about overachieving. So they report 40% share profit. The market was looking for a 16-cent share loss. They said the recovery in its business had continued through the first part of the current quarter, and shares are higher this morning. Dave & Buster's plays their symbol. Play, pull it up. Now you're going to be about $2 higher this morning. Last time I saw it, there you go. So you accelerate last night, and we're right back to where the highs we were, 46.85. You put this thing on a 3-year weekly to see the full COVID run, and you're basically pushing right back to pre-pandemic levels, which is remarkable for a stock that was at $4.61, when basically the market was pricing in that they might go BK before the market gets it back. But just like that, folks, they clawed back, and you see the earnings on the Thinkorswim platform here. In terms of their earnings, you got negative $1.37, $1.24, $1.01, $1.19, and just like that, they come in with 48 cents. Is that right? 40 cents a share. And the analysts were looking for 16-cent loss. Royal Caribbean. Yeah, so one of the first cruises to go out of port, they got COVID on it. Not surprising, folks. 2 passengers aboard its Millennium cruise ship tested positive. They were traveling together, asymptomatic. They've been isolated. It's, you know, we're our, what's their symbol? Royal Caribbean, RCL. We are almost out of this, folks, but we're not out of it just yet. And unfortunately, there are cases persisting. You jump on a boat, you're surrounded by people. Royal was just trading at 96, just like that. We give up $7 from where we were at a couple days ago. You put this thing on a 3-year weekly. It's almost made it back, but not quite. I mean, you are back to levels that we were trading at in October of 2019, but it is pushing about 135 coming into COVID. You make it down to 20. And I imagine that's going to be a common theme until we really get the numbers down to tiny amounts. I mean, you're still dealing with thousands of cases a day. So it is still out there. Excuse me. Okay, Biogen. So this one's an interesting one I wanted to talk about. Of course, the new Alzheimer's drug that they have, quite a weekly bar we got going on for Biogen, of course. You put it on a 15-minute. They get approval from the FDA on Monday. Since then, we've just based higher to about $420 this morning, trading at $419 by $419.89. Again, you put it back on a 3-year weekly. They've had a lot of volatility spikes having to do with this Alzheimer's drug. I believe it was, you go back to 2019 when the news was revealed that they thought that the drug was not going to work. Later that year in October, it comes out, hey, guess what? We had another study. It might actually indicate that there might be some use for this drug. It's back on. Volatility persists across the board. And just like that, though, you're trading at 414. Now, what's interesting here is that, though, they get an upgrade from UBS to a buy from neutral. Bernstein raised its rating to outperform from market perform. Both firms based their upgrades on the potential sales bump from the FDA approval this week of their Alzheimer's drug treatment, Adulam? Not sure how you pronounce that one. Nonetheless, now what's interesting here is, and I don't know anything about this drug. I imagine it's something that if you are dealing with that disease and there's been no type of drug for the last 20 years, that is going to be encouraging on any front. So you completely understand it. But what we're seeing play it out at the FDA is pretty interesting in terms of how certain members are approaching it and the new method that the FDA may be going after. Whether it's right or wrong, I have no idea. It's just interesting that things are changing, and you have to address that. So you have the advisory panel, which usually the FDA follows. And that's what happened here, is that you had the advisory panel voting against it. Okay, voting against approval. And I believe that happened sometime last year. Third member, a panel resigning over the approval. Well, they not be happy, right? And as you persist on that, you see where it goes out. A third member of that panel resigns over the approval. Now, what's so interesting about all of it is that what it talks about is that they want assurities that it's going to work. And so what is happening here is that you have the drug showing that it reduces the proteins in the brain that may cause the debilitation from the disease, but you don't yet actually have the data that's positive that it is actually stopping the progression of the disease itself. You're just going to see it play out a lot more in terms of how that works and how that plays out in a big way in terms of the FDA, and do they need exact scientific data of the end result? Because what they're showing in here is that the studies do show that the amyloid proteins are reduced, and the amyloid proteins are thought to be what causes cognitive decline among patients. So therefore, they're going to make that leap, allow it to be prescribed at this time, and then order more studies to confirm that on an exploratory basis. Nonetheless, 3 people dropping out, but guess what? It's not going to matter because it's approved, and it's the only treatment for a debilitating disease, and it has a price tag of, I believe, $56,000 for that treatment. So that's why you're seeing the rise in Biogen, and that's why you're seeing the upgrades, because no matter what the controversy is going to be, the FDA has approved it. That is now law. Biogen's going to be able to sell it. They're the only treatment for Alzheimer's out there. And hopefully it turns out that it is encouraging data that does slow that cognitive decline, no matter what you think. It's a shame that you think 20 years have gone by almost for such a debilitating disease, and not a single thing has come out that could be used. So on that front, it's encouraging, and hopefully it does come through. All right, jumping around to what else we got to go on. That was Biogen. Jumping around to some of the other stocks out there. GameStop, AMC, Clover, the meme stocks continue to be volatile. Well, surprise, surprise. Thanks for the update, CNBC. But let's jump around to them because you had AMC up. So we're up a bit, back to the 15-minute. Your RSI is 46. I mean, it's pretty remarkable when you can be up 10% overnight, and really it looks like your stock's not even moving from what's going on. You back it up to GameStop shares at 224. AMC, as I mentioned, how about that executive at AMC getting a $62 price tag to get out of this equity? $62. He sold 40,000 shares of it. No, nothing wrong with that at all. No malfeasance, nothing. He just waited. He had 40,000 shares. He or she, I believe it was a gentleman in the board, $62 and change. He cashed out his, and there's a lot of insiders selling. Can't blame him when the stock's just pushing $70 and started the year off at $1.91, folks, $1.91. But still, talk about timing. He timed that well, got out at $62, took his $2.3 million, something like that, for his 40,000 shares, and said, I'll take my cash at that price point and live with it if it trades higher. And just like that, we're back at $44 this morning. Okay, other stocks making action this morning. Callaway, they're going to replace Grubhub in the S&P Mid-Cap 400 Index, Grubhub. So they'll be in there. Eli, let's see how that's reacting to them. Look at this stock, right? Actually lower. Yeah. So Grubhub's getting required. Callaway. All right, there's a couple there. I see. Callaway is going to be replaced in the small cap 600 by Apollo Medical. So they're getting replaced as well. So Callaway Golf's replacing Grubhub, and then Callaway's getting replaced by Apollo Medical as the reshuffle goes on. And a couple others not in there really worth mentioning. The one unit is worth mentioning, Tesla begins deliveries of the new Model S Plaid. You had Elon out there last night at their headquarters talking about the vehicle, and this morning pretty much unchanged on the heels of that. Quite a vehicle, though. I think it goes 0 to 60 in 2 seconds, something like that. We'll talk about it a little bit when we go back. Yeah, it's 0 to 60 in under 2 seconds, breaking the 2-second barrier. That's a tough one to imagine, 0 to 60 in 2 seconds. Stay tuned, folks. We'll be right back for the opening bell.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. We get the S&Ps pulling back from some of the pre-market highs we had, trading at 42.34 right now. Tech stocks slightly in the red. We got the NASDAQ 100 pulling back so close to those all-time highs. We make it to 13,990 this morning. Right now, you're trading at a price point of 13,940. The Dow up 98 points, and we got the Russell up about 11 points so far this morning. All right, jumping around to what else we got going on. We talked about Tesla. So Tesla, 0 to 60 in 2 seconds. Now, they just announced earlier this week that they actually were not going to produce the Plaid Plus, which had a longer distance to go out there. You look at Tesla's website, they're talking about the Plaid. How about 1,020 horsepower? Battery with an estimated EPA-rated range 390 miles, top speed of 200 and 0 to 60 in under 2 seconds. Barely street legal, it seems, from those statistics. But Tesla giving it back on the open as well, as we get a little bit of a pullback going on the opening bell. I mean, Tesla was up at 616 just as recent a couple hours ago. You're trading at 608.09 right now. Let's check out some of those FANG stocks as we have tech stocks pulling back a bit. Amazon giving it back a bit, down about 0.2% right now. Let's put Amazon on a daily. You see the consolidation we're in. I imagine eventually this thing's going to break above 3,500. I have some Amazon in my accounts, but we all almost do if you own any index funds. Amazon's been shopping around forever, and this thing, you look at a stock like Amazon, right? You ask yourself, it can consolidate between about 3,000 and 3,500 for a while. It could do it for another year when you just traded from 1,600 to 3,500 in the span of 1 year, okay? But I don't see this thing challenging 3,000 and ever trending back to the 2,000 trading range. I just don't see it happening. This company is worth more than that in terms of what they have going on in a big way. So when you look at it in that degree, I mean, look at this weekly bar that we're getting in Amazon. A couple times it's happened. It's volatile. We're in a trading range. But I imagine that that's going to be pushing highs as we get a little bit of a push. And we get Amazon back into the green. Look at that little bit of a turnaround across the board as we got tech stocks back in the green. Don't call it a comeback just yet. We got Microsoft even right now. Google, just remarkable action on Google. Slightly in the red this morning, but just a rocket ship in a big way. Facebook at 332. We'll jump to Netflix shares. Up a bit, up 0.6. Facebook shares, mentioned, down a bit. Let's go to Disney. Up about 0.6%, getting a little bit of pop. Let's go over some of the cannabis stocks. So Canopy, up about 1%. These things, talk about extremely volatile recently. Been basing between about 24 and 27, but it's, that's like a 12% trading range. And look at these daily bars. You're talking about these daily bars are about $2 wide on a consistent basis when you're talking about 5%. But you look at where we've been. Let me back out again. Right? That was quite a downtrend channel where those lines line up, a little bit of art versus science. But you can see that we break out of that trend channel on May 24th. We've been basing a bit. You got Canopy trading at 25.81. We'll jump to Aurora. Aurora pulls from 19 down to a price range of 674. Since then, we're up to about 952. We'll jump to Tilray shares. Tilray up to 19. Pretty decisive break in the same way. May 17th, you really start to accelerate from about a price point of 14. We're trading at 1986. And let's jump to Constellation, which ties in with Canopy. This thing, quite a rebounding from that low in November of 160. You're trading at 237, kind of pushing the all-time highs of 244. We've just been basing in this area in Constellation. It's about January 7th. All right, looking at what else we have going on in terms of stories I had up here. This is an interesting one from Bloomberg. So a couple statistics in here I just thought worth bringing up. Fewer young men are in the labor force, more of them living at home. Probably not good trends overall for the health of society for 25 to 35-year-old males. Are young men living at home because they're not working? Are they not working because they're living at home? What's the relationship? Why is this happening? Of course, regardless of why, as this small write-up talks about, nonetheless, it's happening. More American males aged 25 to 34 living in a parent's home, fewer participating in the labor force. Pretty decisive charts, especially when you look at where we even were in the year 2000. I graduated high school in 98, graduated college in the year 2000. I would have fallen into this category up until about 7 years ago. So you're going back to 2014. But remarkable when you look at almost doubling over that time from 12% of percentage of men in the year 2000, just over the last 20 years, you're at 20.8%. And really, this can happen for a variety of reasons, that living at home until the age of 34, I mean, people are pushing back when you have a family. There's a lot of different variables going into that. But in terms of people in the labor force, now you go back to the year 2000, you're talking about 93% of men 25 to 34 in the labor force. Would make sense, right? Seems to be a pretty solid range of age group to be in the labor force. Pre-COVID, you were at 89%. You dropped 4 percentage points, and on a percentage of a percentage, which is you can get yourself in trouble doing, right? But to back it up, in the year 2000, you only had about 7% of men in that age group who were not in the labor force. Well, that's almost a 50% rise. When you look at, we get to the year 2020 and you're at 89%. That's a 4% increase. When you were only at 7%, you went to 11%. It's more than a 50% rise. And now with COVID, we're at 87%. You've almost doubled the amount of people not in the labor force. Now, the article gets into that it could have to do with a number of things, and the first thing you do is you say, wow, that's a big number. Make no mistake, here's the part, though. For a young man who's not working, the couch isn't a bed of roses. About half of prime-age men who are not in the labor force may have a serious health condition that's a barrier to working. You have one economist, Alan Kruger, writing, and that was in 2017. Nearly half of prime-age men who are not in the labor force take pain medication, right? That whole pandemic in itself, in terms of pain medication. In nearly 2/3 of these cases, they take prescription pain medication. Nonetheless, just staggering results in terms of those trends, and hopefully something that turns around, but not really healthy for the economy in any way with that, what's going on. Okay, continuing the trend, seeing what else we have happening. Credit Suisse, this is an interesting one. So they're really pulling back on their risk, probably rightfully so, with the debacle they have going on. It seems like they can't handle anything lately. The Archegos saga, you go from $14.95, you really fall out of bed March 26th. It's crazy that it's been that long since Archegos blow up. You go from $13.34 with $10.75. Now, this talks about, and the story was out yesterday, I was reading as well. They have a star trader, 30 years old, not bad. Hamza Limso, I'm going to butcher that one, unfortunately. Limsoguer. He was going to get pouched by Citadel. Credit Suisse, only 6 months ago, how quickly things change, makes a bid to give him $500 million to start his own fund and some seed capital. They give him his own unit, and nonetheless, then they decide just yesterday, I believe it was, that that's not going to happen, and they're not going to be going down that route. So they're going to be doing a lot less risky transactions, and so one of the things they're not going to be doing is allowing him to launch his absolute return credit fund, which sought to make big bets on stressed businesses. Nonetheless, not surprising that they would be winding that one down. I'm sure he will land on his feet wherever he lands if he's got Credit Suisse and Citadel fighting over for his trading skills. Remarkable you can be 30 and just crush it out of there, but results matter in Wall Street, that's for sure. All right, folks, stay tuned. S&P's up about 6. We got the NASDAQ 100 down 6, Dow up 117. We'll be right back in 3 minutes.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets back in positive territory right now. You're looking at an S&P up by about 7 points, 42.36. Jumping over to the VIX. Got to keep your eye on the volatility index, folks. Sometimes you have seen when the volatility index begins to spike, it can indicate a possible market pullback. All right, when you're seeing the volatility index get sucked out from 18 to 1550 this morning, with everything else going on, with where yields have gone, with where the market just seems to persist higher, pay attention to that VIX, because it's telling you fear is not in this market, not right now, not going into this weekend at least, as we have markets possibly drifting right now into higher territory or just even sitting right where we are. You're talking about right near all-time highs of 42.37 in the S&P. But it's quite a volatility suck out. When you look at just yesterday, we were sitting at 1650 as of 12:30 in the afternoon. We've lost a whole point, in the VIX since 12:30 in the afternoon yesterday. And you look at where we were in the S&Ps, and you're right where you were. This is the point. You know what I'm saying? It's not like the market has accelerated higher dramatically. The market's just really happy with the fact that it's sitting at all-time highs. And everyone's saying, you know what, we don't have to pay all this money for premium, because the volatility that we were pricing into the S&P futures is no longer necessary because of the data we've gotten in the CPI data, in the jobs data, that the Fed's going to be in there, the volatility of worrying about the Fed tapering, not as high as it was previous, the volatility worrying about inflationary data not being transitory, probably not as important as it may have been before the CPI data, which showed, yes, some pretty remarkable numbers, biggest since 2008, et cetera. Some core number was biggest since like 1992 or something staggering like that. But guess what? Those numbers are being driven by some pretty dramatic shifts in pricing in some pretty transitory numbers like used car pricing that's going up 7 to 10% on a month. If you're looking to buy a used car in the next month or two, you might want to buy it today, because it seems like that market might be going up for the next immediate future as used cars are taken over, because new cars, there's just not as many. The used car market accelerating higher because of increased demand. If you don't need to do that, wait for those prices to come back down, because you're seeing, I think it was 10% the prior month, and you have 7% month over month, those prices alone in the used market rising. Okay, jumping around to what else we got going on in terms of articles I had up here, talking about home prices. So you have, this is the Blackstone Group president, John Gray. He's got, I think it's $115 billion they talk about here. Let's see. So he built that $115 billion by, looks like 2008 or so. Yeah. Nonetheless, talking about the economy, talking about housing. And one thing that I wanted to bring up from this, that it's a valid argument in terms of, are we getting ahead of itself in real estate? Okay. And the market is not showing typical warning signs. Nothing's typical right now about what's going on, though, in the markets, in the world in general. So keep that in mind as well when I read this. When you say it's not typical, well, it's not typical what's going on. But too much leverage, too much capital, too much building. That's not happening. The same gentleman, he's talking about a rediscovery of cities such as New York and San Francisco, fueled by immigrants, creativity, entrepreneurship, and technology, said. Nonetheless, whether you agree on that or not, we're not overexerted. We're not overextended, I should say. On the credit front, we're not overextended on the building front. If anything, there's a supply problem. The building could fill that gap a little bit. But he has a horse in the race as well in terms of saying that this isn't happening when he's the president of Blackstone Group, and they have a plethora of real estate on their balance sheet that will benefit handsomely if it appreciates versus depreciating. So not surprising that he's out there cheerleading for sure as well. Okay, let's check out the crude oil market as we tick a little bit higher since I've started the program. You just went from a price point at about 9 o'clock. We're up about a bit. We're only about 20 cents from that $70.80 price point. Interesting that gold gives it up right back to where we were, but not when you look at the note and bond market, because we gave it back as well in terms of where we were yesterday. Interesting, the first reaction on that CPI data was the headline number. You see it often, right? Headline number, biggest number since way back in the past. Well, guess what? You dig into the numbers, market figures out it's not as bad as we might have thought because those used car prices, et cetera, aren't going to be there for long. We now got yield sitting at 132.29 in the 10-year, and the 30-year is flat as well. The 30-year, I mean, you're talking about almost 2 full points from where you were. You plunged to what's the low? 137.31, and just like that, you make it to 159.29 on the 30-year as well. All right, other stories I have going on up there in terms of what I was looking at, jumping around to the stories. CPI data we talked about as well. So this will be the interesting one in terms of long-term implications. You have G7 leaders. They're all going to talk about endorsing the global minimum corporate tax rate of at least 15%, get some of these companies to be paying their taxes regardless of where they're doing business. They're also going to announce an agreement on a new tax that's linked to the places where companies make money rather than where they're headquartered. Make sure that they're just not jumping around to shop the best tax rate. The new tax would replace the patchwork of digital services taxes that some countries have imposed upon the biggest American tech companies. So they'll be discussing that. I'm sure we could get some headlines that come out today, but I don't think it's going to drive anything as we have this market just sitting here, folks, up 7 points at 42.36. You might get a trading range between about 42.30. Maybe you make it down to the 42.20 range. Maybe you make it as high as 42.40 on the S&Ps, but I imagine we're going to trail off into a summer weekend because this VIX is speaking volumes right now. As again, watch it drop as the market just sits at 6 points positive for the S&P. We now get the VIX trading at 15.35, and I brought it up earlier in the program, folks. We're now below the lows we've had that you got in April. You're talking about making post-COVID lows of 15.35. We were as low as 15.15 this morning. We could get a 14 handle in the VIX. We haven't had a 14 handle in the VIX. Well, you don't have to go back far prior to COVID. Remarkable when you look at where we were in terms of even middle of February, right? 14.21 on the VIX. But just like that, we're trading at 15.37 in that volatility index so far this morning. All right. And as I speak, some of those tech stocks, let's check back in. Amazon charging higher. There you go, up 0.25%. We got the NASDAQ 100 up by 11 points right now. As I mentioned, Microsoft shares a little bit higher as well. On the earnings front, you had Chewy out with their numbers, checking in on them. They're down about 2.8% this morning. You had Snowflake with their investor day, trading lower by about 5.2% this morning. Dave & Buster's, let's see how they're trading. Giving back some of the gains, up by about 5% after their numbers last night. Surprise profit versus a loss for Dave & Buster's, still up about 5.1% for them. And how about Restoration Hardware this week? Yesterday, I believe it was. Look at this acceleration on their numbers. Remarkable. You accelerate. Yesterday, I think the stock was up like 15, 16%. I do have some of this in one of my retirement accounts. And yeah, I mean, just a juggernaut. I remember when Warren Buffett stepped into this equity. I think it was early prior to COVID, whether it was late 2019, early 2020. He stepped into this to some degree. It trades to $73, and talk about being perfectly positioned. High-end furnishings for home decor, and just like that, they're going to be pushing all-time highs. You put this thing on a 15-minute, and there's the acceleration. You were just trading Wednesday evening at 6:12, and just like that, we've added $100, but they're giving it back a little bit this morning for Restoration Hardware. All right, folks, stay tuned. We'll be right back in 3 minutes to finish up the show. Give us a call. We still got time. 877-927-6648. We'll be right back, folks.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave. Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the S&Ps up by about 7 points right now. Jumping over to IBM real quick. Had a question in the YouTube Tigers Den about IBM. Putting IBM on the longest chart possible, a monthly long-term chart, you back it up. How about $10 on that chart somewhere back in 93? A little bit of volatility and consolidation between about the year 98 to the year 2010. You take off to a high of 215.90, going to back out, and then since then, quite the pullback for IBM. And what I'm going to point out is we're just kind of rising above that level here. Now, an ode to our channel master, Bud Rolfs, in a past episode of the Tiger Trading Post. Not familiar, Bud used to be a host at TFNN, folks. He was the channel master. He'd say, you want to see a break above that channel line, come back, test that channel line, then bounce off that channel line, and that's where you get kind of a real refusal of that channel. But yeah, you've accelerated higher. I mean, you put this thing on a 3-year weekly. We're coming right back. It's going to be a critical area coming back to the highs of early 2020 prior to COVID. You put it on a 3-year weekly, and there you see 158.75. We're up at 150.64. Back then, we had some serious volume. This is a weekly. That real weekly run that we had, 43 million shares, we've kind of trickled on a weekly basis up to anything above. Last time we had some volume, we were at a high point of 142. We've now risen $8 on lower volume from that level. So be careful. Maybe you see it and let it pull back a little bit, test about 146 potentially for IBM. But yeah, looks to have broken out of that long-term trend channel. You could at least dabble with a partial position, see how it reacts at this 158.75 as well. All right, folks, it's Friday. What else we got going on? This coming Wednesday, Dave White, he's going to be in there with subscribers to any of his services, folks. The Path of Least Resistance, the Technology Insider, his weekly technology report, and then the Art of Timing the Trade Charts, the software program that he developed with my dad, Tom O'Brien. Any of those subscribers, you're going to gain instant access to this for free, but Dave's going to be doing an options webinar. That's coming up Wednesday, 4 to 5 p.m. Eastern Time for any of his subscribers. As I mentioned, the Path of Least Resistance, the Technology Insider. When you subscribe, you gain immediate access to the archive section of the newsletter, so you can stay abreast with that. You'll gain access to the webinar coming up on Wednesday. That will be archived as well. I encourage you to check it out, and you get nothing to risk, folks. 30-day money-back guarantee. If you don't like it, sign up, attend the webinar for free, and enjoy that month. And if you don't like it, money-back guarantee. Stay tuned, folks. We got our man Basil Chapman. He's coming up with the Tiger Technicians Hour live. He's